think it goes back to an operator having the wherewithal and the creativity to negotiate these types of solutions that essentially create wealth and create equity for our investors. And there's a couple of ways to look at it. You can do the quote unquote easy button, which candidly, you as an investor, if you're interested in dipping your toes in real estate, the easy button is probably looking at one of the big private equity REITs. That you can go online. You can probably move money from your existing brokerage account into it very simply. And, in your mind, you're taking advantage of the real estate market. But as a huge, organization that's managing not just billions, but in some cases, 50 billion, 60, $70 billion real estate, we talk about the efficiency factor. And when you are managing those types of assets and real estate, by definition, you are only going to be able to focus on efficient assets, meaning they're very efficiently priced in the marketplace. So think of the big office building in Manhattan or the big office building in Houston. Those are going to be kind of the types of properties that are on your radar. Where working with a group like us, like Lasater Capital, you can uncover those inefficient markets. And especially having the types of relationships that we have with lenders, we can come up with creative solutions like these DPOs because it's not just knowing the tactics and the tools out there, it's having the relationships and having the right relationships with the right lenders that enable you to pull the right triggers to take advantage of these types of things. And so Ty, we hear you say this all the time, and it's not just focusing on operators that have been there during the good times, but it's focusing on ones that have really focused through some of these really, really difficult market cycles. And if you can manage effectively through these market cycles and uncover these opportunities, that's really what it's all about, is looking at some of the challenges the entire industry has faced and then creating opportunities throughout that cycle through tools like these DPOs that we are able to utilize with some of the fantastic relationships we have with lenders. That's just one tool in the toolbox, but I think that's something that's unique. And again, focusing with operators that are able to uncover some of those inefficiencies and really take advantage of the relationships that we have in these local markets.
Brian, I think you brought up a good point with, you said solutions. And I had conversations with probably five of our investors over the last week or two that the same conversation, the same topic, same theme came up. And one of the conversations, and this was with a range of our clients. I had a conversation with somebody that has, I think, $250,000 with us, and I had a very similar conversation with somebody that has $4 million with us. Somebody that was a retiree, somebody that was an entrepreneur, somebody that was a doctor in the medical profession, and that theme was, they didn't partner with us, and our 750 plus investors did not partner with us to have one pathway forward. They chose to not be an active real estate investor, be a passive real estate investor, to get those really four keys as it pertains to investing and building wealth that I talk about. And that's for us with experience to come up with solutions when problems face our pathway in front of us. And so, that conversation, what I was saying with them and talking with them about was, you partnered with us to have multiple solutions. When a problem steps up, how are we going to address it first of all? What's the second option? What's the third option? What's the fourth option? And to keep coming with solutions. And so when you work with an operation that's our size, that has, under a billion, just under $1 billion in AUM, then it comes with relationships. It comes with some flexibility and the ability to, implement a strategy, shift and change from that strategy, and come up with creative solutions to move forward. Whereas, when you're operating with one of the huge hedge funds that has $50 billion in capital that they've got to deploy, they're deploying that into some places that's not generating a return at all times. And just because they have the access to so much capital, you never truly see the impact of the losses that they have on some of the investments that they make. But they've got to allocate that capital. And so, they may have $50 billion in allocations that they got to make, and they go buy a $250 million asset that ends up generating a net loss for them, and you never notice it because of the amount of capital that they have in that fund until it's time to sell out that fund. And all of a sudden, not all the investors find themselves in a positive scenario. And so, I think that's where flexibility comes, and really, as you said, solutions. And that's kind of our focus around solutions is what is option number 2, 3, and 4 whenever option number 1 doesn't work the way that we planned for it to.